Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Wednesday, August 20th. In today's episode, I'll tell you why Softbank is investing billions of dollars into Intel. Then, let's recap earnings from Home Depot and Palo Alto Networks. The markets are off to a pretty rough week this week. The S&P was down 0.6% and the Nasdaq was down 1.5% yesterday. Looks like earnings from retailers has investors spooked, telling us that consumers are not spending as they should and are tightening their belts. Let's run through some headlines, starting with Intel, because they just got a major injection from a surprise investor. Softbank announced that they're investing $2 billion into Intel. The Japanese conglomerate is buying Intel stock at $23 a share, which gives them about a 2% stake in the company, making them Intel's fifth biggest shareholder. You know, Intel is a unique company. I think we're going to keep hearing about them because not only do they design chips like Nvidia and AMD, but they also manufacture chips like TSMC and Samsung. What makes them a very important company, specifically for the US, is national security, because they're the only US company that has the ability to manufacture advanced chips. But these days, they're lagging behind the competition, especially in manufacturing, and they've totally missed the AI boom. They've tried to turn things around. They invested billions of dollars into their foundry business, but so far haven't landed a big customer. Meanwhile, you have TSMC out in Taiwan having the biggest tech companies in the world begging for them to make their chips. So this investment by SoftBank is a much needed boost for the company, and it could help Intel mount their comeback. And for SoftBank, they're familiar with the chips business. They've actually bought the chip design company ARM back in 2016 for $32 billion, and now that company is worth over $150 billion today. They're also invested into Nvidia, TSMC, and OpenAI. The timing of this investment is pretty interesting because there are reports that the Trump administration is considering taking a 10% stake in Intel, potentially converting some of that money that Intel got from the CHIPS Act into equity. But the bigger question is whether all this cash can actually fix Intel's core problem. They've fallen way behind TSMC when it comes to manufacturing, and they've fallen miles behind Nvidia when it comes to chip design, specifically AI chips. Now, Intel stock is up 5% in response to the news of this investment, so there's some optimism from investors that this new capital can help spark a turnaround. Let's shift gears and talk about Home Depot. They just reported earnings, and they gave us a first real look at how consumers are handling this economy. And honestly, it's kind of a mixed bag. The home improvement giant missed on both earnings and revenue for the quarter, with comparable sales growing just 1%. Wall Street was expecting a bit more. The company is sticking with their full-year forecast, calling for nearly 3% sales growth in 2025, which tells me that management isn't panicking just yet. According to Home Depot, people are still delaying big renovations because of economic uncertainty and high interest rates that's making borrowing expensive. And for the ship to turn around, it might just take some time or lower interest rates. Now, on the tariff front, Home Depot does not expect to be impacted too bad. They said that most of their inventory was bought before the tariffs kicked in, so they haven't had to raise prices much. On top of that, over half of their products are sourced domestically. But management did warn that some items could get pricier this year. Home Depot is leaning hard into the pro business. In fact, more than half of its sales now comes from contractors and builders thanks to acquisitions like SRS Distribution and GMS. The pro business tends to be a bit more consistent, and it helps cushion the softer demand from DIYers. Now, in reaction to this earnings, Home Depot stock popped 2% this morning, but probably because investors were relieved the company didn't slash their guidance. But I think we're going to learn a bit more about how consumers are feeling when Walmart and Target report earnings later this week. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of Palo Alto Networks are jumping this morning after the cybersecurity company pulled off the earnings hat trick. They beat expectations on profits and revenue and also issued strong guidance for the rest of the year. Cybersecurity is becoming more critical than ever, and Palo Alto is one of the leaders in the space. The company saw its revenues hit $2.5 billion in Q2, which is a 16% jump from last year. The company did announce that its founder is retiring from his role as CTO after starting the company back in 2005. But investors didn't seem to be too concerned about that, and instead focused more on the solid earnings, with the stock jumping more than 5% this morning. On the flip side, it's a rough day for Viking Therapeutics. Their shares are getting hammered after the pharma company's weight loss pill drug study showed poor results. Now, the pill itself actually worked pretty well. Patients lost over 12% of their body weight. But the problem is that nearly 30% of the patients bailed on the study in just 3 months because of side effects. And it just goes to show you how difficult it's been to develop these weight loss pills. Other pharma companies have been struggling too. Eli Lilly had disappointing late-stage trials recently, and Pfizer gave up their pill after a patient developed a liver injury. Investors are getting concerned, and shares of Viking Therapeutics are in free fall, down more than 30%. That's all for today's show. Keep navigating those waters, and see you tomorrow.